Hey traders, Steven here with tradesplan.com. It is Friday, October the 29th. We're going to look at the overall market and then we're going to look at the top ETFs of the week. So let's just get started and let's start with the NASDAQ. The NASDAQ hit all-time highs yesterday. That's pretty bullish. It's hard to make the bearish case. Lots of volume coming in. The futures this morning are down. Futures are down this morning on some of the tech stocks, definitely because Amazon missed and Apple had some supply chain issues. So we're seeing a little red on the screen this morning, but that's not a big deal. I've been talking about a cup with handle pattern. I mean, this looks like one giant kind of cup-shaped pattern. It probably will, it seems likely to build a handle. I thought it would have already done so, but hey, it's just, we just kind of follow the trend. Just really follow the trend, and right now you got the pink line, which is the 20-day moving average, and the orange line, which is the 50-day moving average. It seems like it'd be a really good area of support to pull back. So we could get 2-3% pullback, see if it can really test the support zone, which is that's really where I think it is, right around 15,000 in that zone, and we'll see if it finds support and then bounces out for a Santa Claus rally. The S&P 500 really, it looks the same, right? Although it hit all-time highs either Friday or earlier this week, right? But it looks the same. It's a little stronger because it has more energy in bank stocks that have been looking pretty good lately. A lot more diversified index, but, the both charts look the same. So let's go to the top ETFs. I got to admit, it's really nice to own the top ETF of the week. Right here, you got 255 ETFs. That's not every ETF out there, obviously, but it covers most of the industries. So you have a lot of clean energy that really popped in the top 10. That's really, I think, an area everybody needs to look at because they've been down for so long, right? This solar ETF peaked in January. It hasn't done anything. It really made a definitive breakout, kind of right here. So there's a lot of bullish stuff going on right here. You have a major cup, right? And it's now trying to climb the right side of this consolidation, okay? It has been consolidating all year long, waiting probably on something in Washington to happen. Last couple of days have sounded pretty good. So this ETF has popped 10% the last couple of days and so far this week. But to me, this looks pretty clear. I've been talking about this for a couple of weeks. Last week I said, hey, you can buy it right here, or you can wait till it pops above 94, which was on Wednesday. Definitely extended right now, but if it does pull back, there's a little red today. If it does pull back, I try to get it as close to the 200-day moving average as possible. Right now it's 10.5% above that level, so I wouldn't risk that much. But man, this is looking pretty strong. And you have a lot of other clean energy ETFs that have some broad participation to go with it. So, but to me, this one is the strongest. So when I look at something like clean energy, which, there's a lot of sub-industries within that, like solar, wind, all that, fancy stuff. If they're all popping at the same time, I'm like, okay, which one do I choose for? I'm almost always going to go with the strongest if it's not already extended, right? Because that's what you want. You want the strongest stocks in the strongest industry. And now all of a sudden these are starting to wake up. So you really have a horizontal breakout, popped above the 200-day moving average. You have, popped above $94. You have it's trying to climb the right side of the base, right? Volume's coming in. It just looks good, but you probably need to wait for, it looked really good last week, and now it's starting to give a definitive breakout. So if you're looking for some individual stock ideas, you can always just Google, TAN ETF fact sheet. That'll give you the top 10 stocks, and that can be a little list that you can go through and find the individual stocks you like. But so far, as far as this week goes, something that I think has the most upside over the next several weeks. Now, that is assuming that some bills get passed, right? This could all change, but I think this has the most upside because most of the stocks, right, a lot of industries like energy, banks, some of the stronger ones, they are extended, right? They're ready to pull back, and some of these other industries are going to start to take leadership. So, and this one has been in the gutter all year. I just think this one has a lot of upside. This hydrogen ETF excuse me, still really thin, right? It only traded 40,000 shares last week. I'd be waiting for probably a pullback to 22, a retracement, right? And if you wanted to be more conservative, you could do a retracement and a rebreak. I'm watching the volume because you can see this is just a very, very thin ETF. Really not enough to trade at the moment. But if volume really starts to pick up where it gets closer to 100,000, I'd be a lot more interested. But it's a very interesting industry. It's a very interesting ETF. It's new. So I would definitely keep this on your watch list. And again, maybe Google the fact sheet to see if there are any good really hydrogen stocks. But there's a theme: clean energy. Oil has been really, really strong this year. So this is really where we want to be invested in. So I would definitely put this one on your watch list, although a little extended. So you can see what else in the top 10, but a lot of clean energy ETFs. Like, look at this ETF. This is the PBW, and this is why I say buy the strongest, because this is still below the 200-day moving average. Solar, the TAN ETF, is already above it. So when you got to make a decision on which ones to buy, now this could play catch up, but I'm going to buy the ones that have held up the best and that are up the most, right? Those are the ones that I want to own. So let's look at nat gas for a second. This one's just gotten too volatile for my taste. I mean, it is just starting to get, this UNG, it's really starting to get sloppy, right? And obviously buying it off the 50-day twice, those were your best options. Now it almost looks like a head and shoulder pattern, right? It's kind of that neckline right at the 50-day moving average. So it could continue, but it's just a little too sloppy. It's already gone up a lot. I'm really not going to trade it. A lot of the agriculture is starting to wake up. You have corn that has broken out of a downtrend. I like it a little closer to 20. I don't know. I mean, this is a good looking pattern right here. I just don't know how much upside it has. And the only reason why I'm a little biased against that is because it's been going sideways, right, for a really long time. But, I mean, it's starting to move higher. So this is actually looking pretty good. I just sometimes I'm a little cautious when something's been going sideways for so long, where you have TAN. It's been going nowhere for a long time, but it kind of has a deeper correction, right? So that tells me it can kind of have a deeper upside. So we'll just kind of have to keep an eye on this. But corn looks really interesting right here as it's breaking out of a downtrend. Same thing with wheat, right? Wheat hasn't really gone anywhere, but now it's starting to notch fresh highs, right? It notched a fresh, probably a multi-year high. Oh yeah. But this is just the ETN, so I'd have to look at the futures. But you had a really, really nice cup with handle pattern breakout, and then it notched, fresh highs. With something like this, I probably would put a stop loss under the 50-day moving average, which is around $7, and I might even let it pull back a little bit more. But I mean, you have, again, you're looking for that broad participation. So if you're looking for a little bit of diversification, this agriculture is now, in my opinion, the last several days starting to wake up. Some of the energy commodities are starting to look tired. They look like they want to pull back. So maybe agriculture leads for a little bit. But corn and wheat are really, really looking pretty interesting. And another one I've been talking about a lot is KWEB, this Chinese internet ETF. It really has changed characters, right? It is above the 50-day moving average, and now it's living above it after it's been living below it, this orange line, for a very long time. You have to excuse my allergies. So it's making it pretty bullish. However, it pulled back the last week, and it pulled back pretty hard, and it reversed right at that 50-day moving average. So, I own it, and if it breaks today's low, or yesterday's low, I'm just out, right? I don't really care. I just rather get rid of it. I mean, I got in right here, so I'm completely fine of taking just a little loss. I don't want to own it if it is going to fall back into this trading range. Okay, so just to be crystal clear, if it rolls over this morning, I'm out. Just take it and move on. No big deal. It happens, right? I'd rather just take the loss. But it might bounce because yesterday was a bullish reversal. We'll just kind of have to wait and see. We knew that ETF was a lot more volatile, right? And it is. Now, this is more of an ETF that's not in the top 10, but man, this is really, really worth watching. Actually, it's probably pretty close, but you know, the semiconductors, and it's a very, you have NVIDIA, AMD, you have a lot of these individual stocks that have done very, very well the last several weeks. And it's an interesting industry because there is a major, major shortage, and putting up semiconductor plants, that's not a quick and easy thing to do. That takes multiple years. So there's a shortage right now, and they could probably charge, this industry could probably charge whatever they wanted to. So there's demand, there's a shortage, and that really kind of creates a nice environment for semiconductor stocks. I think a lot of them are extended right now. You know, like NVIDIA, I think is a perfect example, right? You don't want to chase that, right? AMD is another one that's looking like it wants to pull back. You don't want to chase that. But if some of these pull back, I mean, the overall industry is looking very, very interesting. So, and I do own AMD, by the way, but it's definitely is extended. So, but really the point is, I'd really kind of keep this ETF on your watch list, right? Really comb some semiconductor stocks for potential pullback zones, because the environment is set up. The ETF is moving, the stocks are moving, and the environment, the story behind it is setting up right to me. So I hope this was helpful. Let me know if you have any questions.